spend, I don't know, 3.5 hours trying to dissect that speech. Who were the winners? Who were the losers? And that's not who picks winners and losers anymore, right? The group that picks winners and losers is Anthropic. That's what we saw yesterday with a relatively interesting, sizable move with a bounce for CRM after that huge downturn coming from that 2024 period all the way down, right, losing half of its value from that peak. And now it's almost like, well, remember, go back a number of years. Remember how Apple built its ecosystem, and once you got in, the switching costs became too high? That's where we are now with Claude, and that's why this is going to continue to be one of the major themes of the year. I continue. It's like, what else do we need to add to our wall? Japan, private credit, AI disruption, and then like 40 miles of dirt. Like from a macro perspective, those are the three stories really dominating everything this year to start. And in addition to that, the winners and losers stuff, when it comes to government, that's going to be tied to monetary policy, and that's also going to be tied to any metals agreements, things that the Trump administration are doing. I did not watch it, which is a little unusual for me. I usually do at least try to jump in and figure out what's going on. But to be honest with you, I was just tired. And I decided I'll just read about it in the morning because that information's free. Woo! All right. Any highlights? Anything exciting happen? I don't know. Anything cool happen during the speech? Anybody freak out, yell? Hockey team? Okay, good. That's what matters. Saw the Secretary of Defense bit. I thought we did that with Tim Howard a while back, but okay, we can go with that. It's a good bit, so let's just stick with it. -8 on momentum, but it's weighted at 0.8, right? So what's happening right now is we're seeing a small number of stocks just pulling the index with it. And new highs this morning, interesting to see this, 169 new highs, only 30 new lows, 47% stocks above their 50-day moving average, 51 above their 200. But right now, the overall sentiment leans bearish, advancing this morning, 2,235 stocks, declining this morning, 915. That will obviously change as we move through this day. The whole thing is going to be built around what's happening with NVIDIA. Let's stop pretending otherwise. NASDAQ's at -2. Russell's at -65. But once again, you have these positive drifts happening right now with CAP, just a number of stocks, lower volume, pulling things higher. So, again, trouble with the squeeze is what we're looking for. We're looking at movements around key moving averages. We have a big update, obviously, on our good friend. Where are you, Secret Agent Charlie, anyway? Where have you been? The FNGD is currently hovering right at its 8-day moving average. You know the FNGD? You know what that is? It's the best. It tells us what's happening with leverage in the system. It's telling us, is money flowing in or out with some of these names, big mega cap names. And what we're seeing right now with the FNGD, and I'm going to switch over to that in 1 second, is, wow, that's crazy looking. What's going on here? Is the fact that we are moving to key moving average FNGD breaking down from that 75 level. I know Whispering Candle had reached out to me and said, this is going to 75, hit it right on the nose, and has rebounded. FNGU has rebounded since, which is the triple leveraged ETF, ETN around FANG stocks. That's a good sign for the broader market, right? That's the mega cap. That's the stocks in the MAG 7, which continue to show some strength at the moment and pushing back toward that 63 level. So, again, breadth, very important at the moment. But let's actually talk about the things that matter in the market today. Oh, okay. See, I opened up a can of worms. Sometimes you don't need to do that. All right. Today, there's a little company called NVIDIA. They make pieces of plastic with some metals in it. 195 is really the key number here, and data center numbers we're paying very close attention to today. That capex number, it's not really 600 billion now, it's 650 billion. The DeepSeek remains an overhang. Guidance will be critical. That's what the whole day is about. It's not about what their numbers say. It's about what happens at 4 o'clock when they release that report. And I highly encourage you to drift your eyes right away to data center spending. That is where the capex figure really matters most. Revenue expectations at 65 billion, EPS, blah, 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 blah. Really, at the end of the day, it's all about this. It's all about guidance. What is things going to look like moving forward? And remember, the last time that we did this, we had that morning where NVIDIA, there was a lot of questions about it. We saw what happened with SoftBank dumping their position. We wondered what was going on. Maybe SoftBank was under pressure, and it is, but concerns about its ongoing association in Japan and concerns around their debt and their yields and everything happening over there. But they dumped it, and we came to find out that really the Mag 7 is Mag 1 because Google had made such a leap, and then Gemini had made such a leap. So the question here was, what's going to happen with NVIDIA? After that earnings report, the CEO basically said, well, he said something that was almost a little too on the nose, that there's just infinite demand for AI data centers and AI chips and everything that comes with it. That is mania level language. That is the type of thing that is said by people who are trying to build railroads in the late 1800s, saying there's no shortage of demand here. Well, ultimately, you come to find out that there is. Right? And a lot of that demand is being met on the back of Mag 7 stocks that are not buying back their stocks, but are going out and raising debt to expand their capex. And then you have all of these other major companies that have to refinance their existing debt this year, a maturity wall that is coming very, very quickly over the next 18 months and really will be a theme through 2030. So at some point, the brakes will get hit on this. And the question is today the day? I doubt it is, but I do think that it probably is coming in the next few quarters because of where we sit in our liquidity cycle. NVIDIA will drive the narrative, so will CrowdStrike and CRM. They're reporting earnings as well. So once again, just recognize that if this does not go well, and if there are concerns around CapEx, that's going to drift this market lower. If there is just solid guidance, that can lead to more sideways trading, which is kind of what this market needs given the ongoing plumbing concerns that we have discussed. All right. This is what I gathered this morning. You get up and you read reports. Okay, tariffs are going to remain in place. Cool. Inflation is plummeting. Salaries are rising. Kind of. I don't think that's true, but okay. Inflation, the recent inflation figure that just came out, the PCE signaled reinflation issues. And once again, the idea that tariffs will come back into play, the possibility of moving to 15%, you're going to hear people say, well, tariffs are inflationary. They are inflationary in the sense that they drive up prices for a very small period of time. Boston Federal Reserve saying about 0.5% increase in CPI, but ultimately what happens is it stalls out and it goes the other way because demand is expected to decrease. But that's what I learned out of one bloodshot eye in multiple economics programs over the years. So your mileage may vary. Markets have largely shrugged off this. There was no major announcement from anything that I gathered, aside from the fact that we're going to give our goalie, U.S. goalie, well-deserved medal. But aside from that, really the key focus after really started to shift toward Iran. China going to provide some military support, allegedly, to Iran through missile sales. Anthropic partnerships really are what's kind of driving the overall narrative, the offsetting that AI scare from Monday. Speaker Johnson saying that codifying tariffs would be difficult. The EU and China are already pushing back. Nearly all countries want to keep trade deals with Trump, according to Trump, but that 15% escalation timeline is still the key unknown. I will just note that 15% or whatever it is that Trump does under this new executive order, it is 150 days. So even though the figure goes in, Congress has to make the decision. And if Congress allows it to expire, then that's it. And we just had a 150-day window of tariffs, and then we go back to where we were. This is the first time that we have actually ever operated under that the very specific law, which I've already forgotten because I had actually never even heard of it, even though I've spent way too long doing cross-border capital and cross-border trade. I had no clue what they were talking about. So that just tells me that nobody else does, which is great. Japan, Bank of Japan goes dovish. Why not? Well, that's kind of been the story, right? We've been talking about this over and over again, and a lot of people ignore it because it is an island nation that's very, very far away from everywhere else. You know, it's one of those things where, you know, we look at Japan and we say, hey, there's Japan. It looks great. And then you go, well, you wouldn't know. That's Madagascar. It's the same. No. $156 on the JPY, new session high, and new nominations of two staunch reflationist academics to the Bank of Japan board. The markets did not like that, and the yen is continuing to sell. So they're saying Japan needs tighter policy. The yen at 157 is too weak. The news last week was that the intervention is not on the table at the moment. Really, those calls that were done by the Fed Reserve of New York, Bank of New York, came at the discretion of Scott Bessent, according to various reports. So there hasn't been any true dedication to intervention. But if we push past 160, yeah. Again, weaker yen has helped fuel the reflation of gold and silver prices. There is a very strong relationship between the yen and gold. And once again, the yen, weaker interest rates over there, helping to fund that carry trade. Every single little thing they do to accommodate ends up helping to goose our markets, as the Bank for International Settlements noted in April of last year, report off of the April sell-off. The transmission mechanism between Japan and the United States is very, very close. So anything Japan does impacts us positively and negatively, and vice versa for them. And I know I probably said that term wrong, but again, it's 8:58. I don't have enough ducks to get home. Military escalation is on the table. Hey, let's pay a close attention to oil prices. Senator Cruz saying limited strikes in Iran in the coming days. Trump saying Iran working on missiles that could reach the U.S. Iran buying anti-ship missiles from China, warning that Ukraine not to strike targets hitting U.S. economic interest. Key thing here is it's not so much about the missiles that are the concern. It really should be around drone warfare and the impact accordingly. But we'll be paying close attention to this. Crude currently in range bound. It's gold and silver that continues to rise. This is not just about Iran. This is also about what is happening with the yen. Russia and Iran cutting oil prices to China. That is critical, obviously, because Russia had lost that deal with India. Urals at $12 per barrel below Brent. It was 10. Iran light crude at $11, which is below where it was. So a discount to maintain the Chinese demand as sanctions remained tight. Finally, gold, silver. I keep doing this. Again, one of these things, like my brain just not working today. Three forces driving gold: dollar weakness, Japan weakness too, political haven, demand from U.S. and Iran, and more central bank buying. The Shanghai Gold Index just cut margin ratios. Why not? Signaling that China expects more upside for gold prices. Zimbabwe suspended all raw mineral and lithium exports. Yeesh. Tightening supply chains. Pay very close attention to LAC and all the other lithium names as well today. Huzzah. We did it, everybody. We got there on the nose at 9 o'clock. Hopefully, Ed minds you are calm. You're happy that we did it on time. He was very upset yesterday. He was demanding the runner at 9:09. AI, oh, wow, great. Anthropic dials back AI safety commitments. Perfect. I recommend Mellow Corn. It's very, very good. Intel. Let's take a look. And then we'll look at triples. Triples is good. Triples is best. Intel, INTC. Well. Very nice strength here. And one of the things that I'm obviously looking at from a time frame perspective on a daily, and we'll go interval year to date. We pulled back on Intel from that 54 level, but Intel remains that one of those names that I consistently just state I want to own it at a lower price, right? So it's moving in a direction that we want it to be seeing. We wanted to see it kind of finding a little bit of a bottom. We're at a 520. Let me split this over to an 8 real quick because that's the more important figure. And what we're seeing at the moment is a little bit more strength, a push to 56.12. This is one of those things where there's kind of a little bit of a line in the sand. And the nice thing about this is I can trade this multiple ways. I'm looking for continued strength, coming back above that 8 and that 20-day EMA, currently sitting at 46.43. Intel had joined Samanova for a $350 million round, launching a multi-AI collaboration. That happened yesterday. More next generation. And the trend of Intel seems to be higher highs and higher lows. So we're coming out of this period most recently. Let me take a step back here real quick. We're coming back out of this period most recently where Intel had effectively popped from 20 up to about 30, pulled back a little bit, popped to 40, pulled back to 32, popped to 55, and pulled back to 45, right? And the process along the way has been moves down to the lower edges of RSI and MFI down in the 40s and 30s, respectively. So what I would prefer to do is just kind of being a little bit more conservative on some of these names while momentum is still red, is to sell spreads, to sell to the downside, to look for opportunities using something as simplistic as a bullish put spread. And if I go out past, I really do want to go out past April, or into April, forgive me. We've seen a lot of action on individual puts for this around that $48 level. But something as simple as buying the, 37, because you're going to push past earnings at that point. Something as simple as maybe the 36.34 for April. That may provide somewhere in that range of 20% return, 80% probability of profit. If you're going the other direction, it is to simply buy at the money somewhere around the $45 level and look for a continuation of trend, simply looking to get to 46, 47, 48. So you set a tight stop, you ride about a 20% stop on this and look for continued strength. And you use the 20 and the 8-day moving average as support, right? In case it breaks down, you just get out of the way, you keep a tight stop, and you move on. ERO, couldn't tell you what you do until I see what you are. ERO. Another name that just continues to bleed higher. Copper, still looking good. Nice solid move off of that pop. We hit 40 back at the late January. And then we pulled back since. And if we go back 20 days here, you could see we've had a nice solid swing higher. And what we're looking for here is, again, the basement trade. These are the stocks that start to wake back up. I actually like this moving back to 40. We have a positive crossover on the daily on the MACD. The histogram looks like it's about to switch over. So same thing. This is as simple as just buying the stock. $34, looking for another move, 38, 10% move in the next 10 days. Keep a tight stop. Go 2% on it. Go back down to maybe $33. And you're looking for $5, $6, $7 of upside against $1 downside. Try to make 100, or forgive me, try to make a couple hundred, lose 100 to maybe make 600, or buy the stock and sell the calls. Another simple way to do this. UAMY waking back up again. This is one of those things where I just simply note when you look at UAMY, U.S. Antimony Corp. This is not this trade. This story is not going away. And where are the lows? It goes back to December around that $5 level. If you could sell spreads to the downside, you're in good shape. But the MACD crossing over, positive move on the RSI. I'd like to see the money flow index get back above 50. But this is something as simplistic as just buying the $8 call and selling the 10, looking for a little bit more vol. This is actually heavily shorted stock, which is pretty wild given the fact that the United States government is invested in it. FinViz showing a short float of 21%, and we're pushing back above these moving averages. So that's where covering can happen and happen pretty quickly. That short ratio at 2.08, 26 million shares. So once again, something as simple as buying stock and see if we get another one of these pops. We are back in that environment with weaker currencies, a lot of focus on war, a lot of focus on what China's doing. You're one headline away from a $3, $4, $5 move on UAMY. All right. I really need that. Mark's got some thoughts, man. Thing is, Mark, like again, Goldman, JPM, we're seeing it and it's in the data. I know it's very frustrating, but what I'm looking for, and like this is not a normal situation, right? Again, we go back to the readings that we have here and we talk about on a day-to-day basis. This is not normal. This cap weighted to be moving from -8 to 0 to -8 to 0 to -8 to 0. It's very easy to make an assumption, to make an argument that we have a situation right now where, there's algos and zero date and, brokers playing games. It's legitimately, I still argue, it is a plumbing issue. It is the fact that the Fed is providing support. Japan is providing support. Every time that we get a, sizable sell-off, we turn right back around and we see $120 billion in stimulus out of Japan. We see the Fed change rules. We see Japan change rules. They just changed rules on their insurance companies and what they can own and what they don't have to sell. And all of that creates, unfortunately, optimism or at least some level of support where funds that are, moving through the chain of rehypothecation and other things in the way that leverage operates in the market, they don't have to unwind. There's no forcing. I mean, again, I keep advocating and keep arguing that the S&P 500 would be at a lot less right now if Japan was not doing what it's doing and if the United States was not doing what it's doing. So Eric's saying the new normal. It's precedented. It's just precedented in a different way. PCRH, WW, and THO are on our other side here. Again, I think the key thing to keep in mind in an environment like this, and this can be a little bit tricky, is really at the end of the day, this stuff continues to pop up, pushes above around a 20-day moving average like Porch Group has, software application company. You have to keep a very close eye today on names like this. This is going to be a day where Porch has the possibility of going to 10 or down to 4. CRM going to be in focus, NVIDIA with its report, and again, a lot of that focus on who are the winners and losers and what Anthropic is doing. So I just argue you take some of these names, we're moving toward the end of the week. Some of these companies like Porch, the software application names, they become volume-weighted average price trades. So when I'm talking about PRCH, one of the companies that hit our list yesterday to the downside was Hood. And I got very, very close to shorting, or at least trying to short Hood yesterday. But what happened? Well, what happened is that Hood popped in yesterday's market, even though it was on a negative screener for me. It popped above volume-weighted average price, and it just bled up all day. And I'm not going to try to short something unless we're here. We're on this side. We're in this range, right? That first standard deviation of price. People want to try to short stuff up here. They see things on screen. You got to combine that conviction. You have to also add the 3-minute charts and look at the adjustment on the 5 and the 20 and the 8 on the 20, and then pick that exact moment when you should try to make that trade. Timing is going to be more important than ever in a market like this. And you will bang your head against the wall if you are trying to short things that look gnarly, and it gets these little tiny relief days. Nothing good has happened for Robinhood in the last couple of days, but you get a little bit of a relief rally, you get some profit covering, just the way these markets work. I'm going to just note real quick that we have been really bullish on Texas Pacific land the last couple of weeks. It has dropped off of my screener for one of the top names. It has been replaced, so the momentum has completely and totally stretched, which is important to note. It has been replaced by Westinghouse Air Brake Technologies, WAB. Top name on drift for earnings is still going to be Keysight, Keys, and Lindy, Lin. Hi. Look at that guy. Lindy. The triple Lindy? Look at that move yesterday. Yeesh. That's first standard deviation. So let me add a couple other things for you. To the downside, Weyerhaeuser has not found support. Invitation Homes has not found support. Workday has not found support. Workday is a mess. It is a hot, hot mess. I don't know how any of those companies are going to survive. I don't know how Asana is going to survive. And I think that ultimately is going to be the story, right? At which companies just completely and totally capitulate to Claude. Insider buying we've seen on Huntington Bank shares. We saw some insider buying today on some of these, beaten up private equity names. But on the other side, just real quick, I do want to point out, looking here, where's their strength? It's PG&E, Viatris, and FedEx. Yeesh. Who'd have thunk that? Quest Diagnostics and DaVita, add them to your list. And on the downside, it's still the same usual suspects. So Ares, Apollo, Blackstone, what do we do with that? You take these names, you add them into your volume-weighted average price, and you pay very close attention to where they sit during the day. We're having a good time today with TradingView. That's not working at all. Perfect. Porch Group. Hey, we're back. Cool. All right, let's go back to our old friends. These are names to keep in mind, keep in focus. Circle, RXRX, and NVO. Oh, NVO. What is going on with this today? Does anything want to work? Any technology has just all tech? Are we going to get to that point where I talk about Claude and then all technology just stops working? Like it just starts protesting? Feels like it. There we go. Novo Nordisk looking interesting. CRCL, Circle. So had a nice pop yesterday, and it is a reminder that even though some of these things look really weak and they've been beaten up, if you're trying to take aim at them, you need to learn volume-weighted average price. Remember, this is the institutional line. This is where institutions like to buy and sell. It is considered the fair value for the day. So if we get these breaks, right, you're trying to be aggressive, you have a conviction bet over a period of a couple of weeks, don't try to do it down here. You're setting yourself up for a possibility of a reversion. You're setting yourself up for the possibility that algos start covering certain positions. You want to be around here to take aim at something to the downside. We added RXRX on this. We're getting to the point now with RXRX. I want to remind you, this thing does move pretty well in lockstep with NVIDIA. So if NVIDIA rallies, RXRX is a nice little dark horse to pay very close attention to. And I like the fact that it gives us around a 70 cent range for VWAP on a 350 stock. That's a lot. You can do a lot with that. You don't need to trade options. You can just simply look for reversions and opportunities. We pop above this blue line. It becomes a buy. You try to pull 20, 30, 40 cents out of it if you get it. All right. Cool. It's 9:15. What do we got? We talked about triples yesterday. And we're going to start testing this. We'll start trading some of this. One of the key things here is that the anchors, there's nothing negative. So it's suggesting, continuation of trend, a little bit of squeeze. I'm looking for some of this stuff to continue to get beaten up. I'm long VTRS, but this is really in just a relatively quiet opportunity. We're combining multiple forms of momentum together to see if it works. And that's what we're going to continue to test. The drift looks positive. The anchors are cheap. The convictions look good. And we have high scores on things like PG&E. We have had a couple of these names that we've talked about in recent days. We've given them away, right? We want to make sure that this stuff is, early detection. And we've had huge moves. Keys was on that list the other day. You can't tell me that it wasn't, because we talked about it 3-4 days ago. Friday. And if we look at this and we pop over to Thinkorswim, you can see what the result of KEYS was, right? Like just a missile. And it was what were we? I think we were at like 234 when it detected. So that's good. That's what we're looking for. And it's a process. It's a process. Key DGX on the list today. It's just a reminder to me that I have to go get my blood taken. I like this momentum setup. I like DGX. I like selling spreads on this right now. Down around the 192, 190 level on DGX, looking for a continuation of trend here. Nice move there. And again, just buying something in the money at like the 207.50 and selling at the 212.50. That can be a pretty productive little trade. We're looking just for continuation of trend. It's a lot of paranoia going on. Cool. Updates in the background. So frustrating. What are we talking about? All right. Bullish put credit spread work at the current price. I'm still very deeply concerned about private credit. And again, these things are really beaten up. KKR it's on the list of crashers still, I think. No, maybe it's not there anymore. That's a good thing. It's good to see that. Let's see. See if KKR is on the other side of this. So, yeah, that's actually a pretty interesting trade, to be honest with you, because like Apollo and Ares are both under a lot of pressure still, but the big difference is they haven't seen any insider buying. And on the insider buying front, we saw two very sizable insider purchases. So we'll wrap up on this. Let's take a look. KKR had Director Matt Kohler, $4.5 million at 102. KKR co-CEO, $12 million. I hope I didn't say billion. Million. Other co-CEO, $12 million. Another director at $5.2 million. That's 104. Implied volatility is massive right now. So KKR, if you're willing to hold your nose and you're willing to take possession of it at a much lower level, and you're asking about a bullish put spread, we're at 96 right now. I would go, to be honest with you, I would go out very far. And I'm talking like somewhere in that May range might be possible. If you have the tolerance for Third Friday, and I just don't right now, but if you have it, something as simple as we're at 96. God, that'd be a big drop. That May 20th, 87.85 is currently 80% probability of profit and 14% max return on risk. 125 to make 20. You're going to have to want to take possession of KKR if it pulls back. So elevated, a little tricky. Not my favorite thing in the world right now. But what I would prefer to do is just see if the stock can get back up to that key, 102 level where the executives bought it, and then think about making those sales. All right, it's 9:20 right now. That means Don's coming up in 10 minutes. I'm going to be back at 12:30 today. Wow, early. But got to keep moving it up. So get ready. If you're not a member of TheoTrade, I don't know what you're doing. Get in the room with us, get your 3 trades, name your price, and once again, get involved with, our ongoing focus on momentum here in the afternoon, a little bit of midday momentum, a little throwback. And we will be talking about some of the names on that list, looking for different trades and how to trade it intraday using the 8-day move, the 8 and 20-day moving averages in a 3-minute chart, using volume weighted average price, and looking to take what the market gives us. I hope everybody has a great trading day. Again, questions, support at TheoTrade.com. Put Garrett in the subject line. Here is Don with a song that he played 2 weeks ago.